Why rental property investing? Rental properties have long been a popular choice for building wealth. They offer consistent cash flow, tax benefits, and the potential for property appreciation over time. The right approach, they can also provide a hedge against inflation and a steady source of passive income. What makes 2024 unique? In 2024, the real estate market presents some unique opportunities and challenges. Interest rates have stabilized compared to recent years, making financing slightly more predictable. However, property prices remain high in many regions. This means finding a good deal might take more research and negotiation than before. Key benefits of rental property investing. Cash flow. Monthly rental income can provide a steady source of cash flow after covering expenses like mortgage payments, property management, and maintenance. Appreciation. Over time, property values tend to rise, building equity and increasing your net worth. Tax benefits. As a landlord, you can deduct expenses like property taxes, mortgage interest, and repairs, reducing your taxable income. Control over investment. Unlike stocks, where you have little control, real estate allows you to influence your investment's success through property improvements and strategic decisions. Risks to consider. Market volatility. Property values can fluctuate based on economic conditions, making timing and location critical. High initial costs. Down payments, closing costs, and repairs can make getting started expensive. Management challenges. Managing tenants, repairs, and legal issues requires time, effort, or the cost of hiring a property manager. Vacancy risk. Periods without tenants can disrupt your cash flow, so it's essential to budget for these situations. Tips for successful investing. Research the market. Look for areas with strong rental demand, growing populations, and economic stability. Crunch the numbers. Calculate potential cash flow, expenses, and ROI before making a purchase. Start small. Consider starting with a single-family home or duplex before scaling to larger properties. Build a network. Connect with real estate agents, property managers, and other investors to gain insights and opportunities. Plan for the long term. Real estate is a marathon, not a sprint. Focus on building sustainable wealth over time. Market trends in 2024. Economic landscape. 2024 presents a mixed bag for real estate investors. While inflation has cooled compared to previous years, it's still affecting the cost of building materials and property maintenance. On the bright side, employment rates are stable, supporting demand for rental housing. Interest rates. After the dramatic rate hikes in recent years, interest rates are now stabilizing. This means financing is more predictable, but you'll still need to shop around for competitive mortgage rates. Shifting demand. One trend we're seeing is the rise of secondary markets. Cities like Austin, Nashville, and Raleigh are booming, with strong population growth and job opportunities. If big cities like New York or Los Angeles feel out of reach, consider investing in these emerging hotspots. Remote work influence. Remote work continues to shape housing demand, with many renters looking for properties outside of traditional urban hubs. Properties with home office spaces or access to outdoor amenities are especially appealing. Advanced strategies for rental property investing. Leverage creative financing. If high down payments are holding you back, consider options like FHA loans, partnerships, or seller financing. These methods can help you get started with less upfront capital. Focus on cash return. Instead of solely looking at appreciation, calculate your cash-on-cash return. This measures how much actual cash flow you'll get relative to the cash you invested upfront. Aim for at least an 8% return. The BRRRR method. BRRRR stands for buy, rehab, rent, refinance, repeat. This strategy involves purchasing distressed properties, fixing them up, renting them out, and using the equity to finance your next deal. It's a powerful way to scale your portfolio. Diversify your portfolio. Don't put all your eggs in one basket. Consider investing in different property types, single-family homes, duplexes, or small apartment buildings, in various markets to spread your risk. Consider short-term rentals. Platforms like Airbnb and VRBO have opened new doors for investors. Short-term rentals can offer higher income potential than traditional long-term leases, but be mindful of local regulations and the effort required to manage them. Practical tips for beginners. Start with a solid plan. Define your investment goals. Are you looking for monthly cash flow, long-term appreciation, or a mix of both? Clear plan will guide your decisions. Build a strong team. Real estate investing isn't a solo venture. Surround yourself with a reliable team, including a real estate agent, lender, contractor, and property manager. Master property analysis. Learn how to analyze deals using tools like the 1% rule. Monthly rent should equal at least 1% of the purchase price, or the 50% rule. Expect half of your rental income to go toward expenses.